I'm Matt Bichard with REIT.com. Joining me for this episode of Fundamentally Speaking is Calvin Schnure, NAREIT's Vice President of Research and Industry Information. Calvin, thanks so much for joining us.
Thanks for having me, Matt.
I'd like to talk a little bit about the residential REIT sector, which has been the top performing REIT sector so far this year. What's been driving that performance?
REITs have done well in the market because people are anticipating the sector would do well as the economy accelerated. And we actually have seen that. Second quarter earnings came in quite strong. We saw most REITs meeting or exceeding expectations in terms of funds from operation. Same-store net operating income was quite strong, and it's driven by the fundamentals. We're seeing rising occupancy, which means more people are coming and signing lease, looking for the apartments. That's supporting rental growth. Perhaps most important for the sector is many of the REITs raised their guidance for 2014 and for 2015. So the people who are operating these apartments see good demand out there. They're very comfortable with the outlook.
So then your outlook would be for the strong performance we've seen is likely to continue?
That's right. This is more than just the spring leasing season. This is the fundamental forces of the pent-up demand coming into play.
What about the risks? What are some of the major factors people are looking at?
The two biggest risks would be, first of all, new construction. People have noted that we are on the cusp of a supply wave, or in the middle of a supply wave. And the other would be if strength in the single-family market would siphon off the renters, if people would graduate from rental into moving into a new home. Those risks are there, but they're much smaller than this level of pent-up demand. Just think a bit about the numbers. The typical construction of apartments in a year is somewhere around 300,000 per year. Well, we saw an increase of 500,000 new rental households over the past 4 quarters, and that's only at the beginning of this wave. Similar thing with graduating to the new home market or first-time home buyers. Those numbers are quite small relative to the pent-up demand of 3 million, 4 million, as the job growth allows these people to come into the rental market. So there are a lot of people who are concerned about those risks. People who are following the market should keep in mind that the stronger economy has more wind behind it than those risks are going to be a drag.
Calvin, thank you so much for joining us.
Thanks for having me.
For more on this and other REIT news and analysis, be sure to visit REIT.com.